if you look at our results for 6 months, it included the results of the new acquisitions for about 2 months, and then obviously results for 6 months for the existing operations. The larger part of our business still comes out of the pigment division, but with the other divisions, more so a bigger portion of the business. It's been a mixed bag. Our industrial chemical division has done very well compared to the previous year, and it's on the back of good growth. It's on the back of more products in the basket with more footprint, and I foresee that will continue to be the case for the current year. The agrochemicals division is obviously new in the basket, and it's done above our expectations when we evaluated transactions, so we're very happy with that. And in silica has been fairly stable. It's been stable for the last number of years. It's doing very well on the fine chemicals, fine silica part, but it's not doing well on the aggregate side, which primarily means construction type of products. It's also the part of the business where we don't, or a sector we're not trying to focus on. We prefer to focus on more the fine silica, which goes into metallurgical, water filtration, fertilizer type of applications. It's high value type of products, and that's where. But it's been a division, been fairly small of our total makeup, but has been stable. The larger part of our business is the pigment side, again made up of organic and inorganic pigments, dispersions and resins. There we have seen a mixed set of results dependent on the product line. Some product lines have been on target and growth from last year. Some products like iron oxides and titanium has been below target. Also in that division we do export a lot into Europe. The European exports unfortunately have been very negatively affected in the last part of the 6 months, from October onwards. Overall, if you look at it as a package, I think we've shown good growth in turnover, primarily on the back of the acquisitions. We've shown good growth on operating profit, with reasonable growth on an earnings per share basis. I think what we've achieved with the acquisition is to diversify the group into more sectors and to assist in periods where one sector, one business is down in a specific sector, and the other sectors are up. It sort of balances out your risk in the business, and we'll continue to do that. I think that for us it was, from the outside, said it was quite important that we diversify the business away from just being a pigment operation, but into being a larger chemicals operation. I think the one, if you look at our balance sheet, our cash flow for the 6 months has not been great, but it's very similar to previous years. The July to December period is a difficult period for us, especially December. Debtors tend to pay you, not pay you in December and pay you late in January, so your debtors are always on the back foot. And you're in a very high stock mode because you're in the high season for manufacturing and distributions into the new year. So traditionally it's been not been a good period for us from a cash flow point of view, but however I would expect it to recover back to normal trends and what you've seen in previous years from the Rolfes Group. June should reflect a better working capital ratio scenario than we had in December. We've incurred a lot of debt to obviously paid for the acquisitions. It's 5-year term debt. We're busy restructuring some of the debt which is on short term into longer term to match the longer term earnings of the companies with the payments to the debt providers.